Hi folks, welcome to another episode of Who Said What. I am your host Krishna. For those of you who are new here, let me quickly set up some context for what this show is about. See, the idea is that I'll pick the most interesting and juiciest comments from business leaders, fund managers and the likes and contextualize things around them. Now, some of these names might not be familiar, but trust me, they're influential people, and what they say matters a lot because of their experience and background. So, I'll make sure to bring a mix. Some names you'll know, some you will discover, and hopefully, it will give you a wide and useful perspective. Now, for all the sources mentioned in this video, don't forget to check out our newsletter. The link is in the description below. With that out of the way, let me get started. So, TCS just released its Q2 results. In their official statements, they've called it a resilient quarter. But if you've been looking at the news or reading our pieces, you would know that these numbers hide how wild times have been for TCS. Just last quarter, they fired over 12,000 employees, which was a whole 2% of their global workforce. This quarter, their workforce dropped by over 19,000 people to below 6 lakh, which has never been crossed in the last 3 years. That's pretty big for a company that is India's largest employer. They recorded a very dismal first quarter this financial year, so this newfound growth is to some extent owed to a lower base. On top of that, it seems like TCS and its peers don't yet have a proper strategy for the age of AI. However, in a recent interview with ET Now, senior executives from TCS gave us more clarity on the direction they're headed in. This quarter, they announced a big foray into data centers, installing 1 gigawatt worth of data center capacity in the next 5 to 7 years. Here's what their CEO said.
Demand in the next 5-6 years is expected to go up to about 10 gigawatts. And the supply is expected to be only about 5 to 6 gigawatts in next 5 years. So there is going to be a lot of unmet demand. And that's the reason we said we will commit to a gigawatt of data center over the next 5 to 7 years.
Now this is an unusual move for a company like TCS. Much of their business model involves working at the services layer, putting manpower on a client's project and helping the client build out their systems. This model typically doesn't require a lot of capital-intensive investments, which is why this decision came as a surprise to many. Now TCS has called it both an opportunity to enter AI as well as to boost their core services business.
We want to increase the participation in the overall AI ecosystem. So what are the ways we can participate? Like in the previous quarter, we announced TCS getting into sovereign secure cloud. Yes, okay, that is one adjacency we want. We're not being actually a very significant private cloud provider.
But what part of it is AI driven versus what part of it is meant for their core business is really up for debate. It doesn't necessarily have to be an innovative move. Having their own data center will help reduce data costs that client projects or even the company's own internal operations will incur. They don't have an AI product of their own yet that requires a data center. On the other hand, as we have covered before, data centers themselves are proving to be a huge business opportunity in India. What's more, this opportunity is, at least for now, not primarily being driven by AI needs. TCS right now stands somewhere in that opportunity. Build a data center to optimize non-AI needs while also being in a position to lend its data center to other companies that need it. Now, as an investor, at the moment, there are probably many macro questions running through your mind. How should you think about India's economy with all the trade headwinds it faces? Can we still grow at the same pace as before? What can the streamlining of GST laws really do? With all of this negativity, are there reforms that India should look to pursue? Well, in a recent interview to CNBC TV18, India's Chief Economic Advisor V. Anantha Nageswaran answered some of those questions. I'll begin with the big one. In this assessment, India's GDP growth will not just stick to the band that they had forecasted, which is 6.3 to 6.8%, but will probably land in the higher end of that band.
The final number, which we have given a range, 6.3 to 6.8% in real terms, I'm more comfortable now in saying that we will be tending towards the upper end of this range rather than the lower end of this range.
Now, what makes him so confident? Well, he thinks the recent GST reforms are going to be hugely beneficial to our economy, and combined with the rationalization of income taxes earlier this year, could create a lot of new economic activity across the country. Now that's partly a simple outcome of the fact that by paying less tax, people will have a lot more money left in their hands, which they will spend in the economy. By his estimate, all said and done, the recent GST reforms are going to add up more than 1 lakh crore to people's pockets. But there's more. Every rupee added to the economy multiplies itself. After all, if you spend in a shop, the shopkeeper has more money to spend. Anyone they buy from then has more money to spend, and so on. Those tax savings, therefore, wouldn't just create 1 lakh crore in extra economic activity. They will do more. As he says,
and then if you really assume a marginal propensity to consume, as they call it, MPC in the economist jargon, which basically means depending on how much households consume, then it leads to further income growth. And so 2-3 rounds of multiplier effect, then the total impact on the economy will be even more than 2.5 lakh crores.
now all of that will show up as extra economic activity. And that economic activity could shelter the Indian economy against all the pain coming its way from the US. As he says,
if the GST rate reductions were not there, based on what we knew at that time, by the end of August or something, we could have said this year's impact will be about 0.4 to 0.5% of GDP reduction. And next year, it might be, I'm saying reduction from what, you might ask, reduction from the trend growth rate of 6.5%.
Right.
That is what we would have said. And next year, it would have been closer to 1%.
Right.
But again, now that the GST rate reductions have happened, it might actually be a lower impact than what I just now mentioned.
the big fear many had with the world's trade uncertainty is that India is quickly losing its shine as an investment destination. But if the chief economic advisor is to be believed, that too isn't something he is seeing.
And if you look at the first quarter numbers, April to June, the gross FDI flows were $25 billion. So annual run rate of $100 billion at the moment, compared to last year, which is $80 billion. So I think the investment interest from whatever I have seen, people who have visited us from other countries or even from the United States themselves, the picture of attractiveness of India as an investment destination or a manufacturing destination as an alternative to in the overall China Plus One framework, I haven't seen any diminishing of that interest.
Even with the 50%?
Even with the tariffs, yeah.
But that doesn't mean more work isn't required. And it doesn't mean that the government is sitting on its hand after the GST reform. The next item on the economic agenda, it seems, is deregulation. As he says,
now, the other thing that we are focusing on is the deregulation part, because our goals are to boost private capital formation and get manufacturing share of GDP up and increase the share of small and medium enterprises in this. All these three goals are well served by deregulation, not just at the union government level, but also at the state government level. So I think the next important policy agenda would be to get this deregulation committees to submit their reports and start acting on them immediately.
now that's a massive project, but it could also be transformational. Now we've already written in the daily brief about how Reliance crashed into India's soft drink market. It bought Campa Cola for just 22 crores, spent 8,000 crores setting up plants, and somehow turned that dusty old brand into a 1,000 crore business in barely a year and a half. But that was just the teaser. Because when we wrote about it then, Krishna, the man running Reliance Consumer Products, had already dropped a hint. He said the plan was to reach 600 million consumers at the mass end and work closely with neighborhood stores by giving them margins at today's cost. In other words, win India from the kirana up, not from the top down. Now cut to this week, he was on CNBC TV 18 saying this.
By this time next year, really available nationally with almost every category in the FMCG business, food, beverages, and in food, biscuits, snacks, and instant ready to cook and ready to eat foods, and then into home and personal care in a big way, as also beverages, as you mentioned, and general merchandise.
Now that's not subtle. That's a full-blown declaration of war on everyone from HUL to ITC. Now think about the playbook here. They've revived forgotten Indian names, first Campa and now Velvet. And they're bringing them back to life with Reliance-style pricing and muscle. When they launched Independence Water, they sold 750 ml bottles at 10 rupees and 1.5 liters at 20 rupees when everyone else was charging the same for smaller sizes. Then GST cuts came in and they still priced a liter at 15 rupees. It's a volume warfare. Krishna further says,
By the year 2027 end, we should have in our portfolio at least 5,000 crore brands, if not more.
Now that's the goal. 5 Campa-sized brands in 2027. The consumer products arm itself is only 3 years old, but it's already pulling in over 11,000 crores in revenue and it has 2,000 crore brands under its belt, Campa and Independence. It will be interesting to see how this space evolves further. That's it for this episode. See you in the next one. So TCS just released its quarter 2.
अबे जल्दी बोल, कल सुबह पनवेल निकलना है.
Just last quarter, they fired over 12,000 employees, which was a whole 2 or Campa काला क्या बोल रहा हूँ